Hello again traders, doing over there once again from DRFX, Swing Trading Mentoring. Going to be taking a look at the pound US dollar, which as you know has been in a very strong downtrend in favor of the US dollar over the last couple of months. And based on what we're seeing right now, we can see that the market is heading to a major support point that hasn't been hit since 2016. So I'm going to be taking a look at the movements that are taking place on both the daily chart and the 4-hour chart to show you how the market could eventually hit that support within the next couple of days and weeks, which could also provide us with a trading opportunity as the market hits that major support point. Now here you can see the broad overview of what is taking place on the daily chart of this currency pair, where as you can see the market is heading right now to a major support point at 1.19042, which was formed back in July 10th of 2016. So this looks as if it's going to be the main target, the next major target that the market will hit. And so we're going to be looking forward to taking advantage of this bearish movement that is expected to hit this major support point, I would say within the next week or two. So this is the overall direction of the daily chart on this currency pair. And as you can see, the market is in a very strong downtrend, which has allowed us to draw these two downtrend lines. This outer downtrend line as well as this inner downtrend line. So a strong downtrend in favor of the US dollar against the pound. That is going to be taking us down towards this major support point. And in so doing, provide us with a possible trading opportunity as the market makes its way towards this area here. Now, taking a closer look on the daily chart, you can see that the market is fairly close to hitting this price point, right? And as part of the downtrend, the market has actually started to pull back a little bit, which is very common when we're talking about trends, either an uptrend or a downtrend. So the market will have an ultimate target, but from time to time, you'll see that the market will pull back before actually resuming the major trend direction. So here you can see that the market has definitely started to pull back over the last couple of days, and this has allowed us to draw this counter trend line, which as you know is the line that we draw across the bodies of candles as the market pulls back temporarily against the major trend direction. So assuming that the market is going to be hitting this major support point, what is expected is that the market will eventually lose its bullish momentum and then U-turn to break this counter trend line and provide us with strong bearish signals to indicate the continuation of the movement towards this major support point. Now, from the theory of counter trend lines from the trading manual, you'll basically see me describe these counter trend lines as temporary pullbacks, or lines that we can draw below these temporary pullback candles. And so what this indicates to us is that when the market has broken these counter trend lines, whether in an uptrend or downtrend, those breaks and the signals that they provide indicate the continuation of the movement in the direction of the major trend, and will also provide us with an entry opportunity to take advantage of these signals of this trend direction. So in other words, trading starting to open a position above these counter trend lines is going to be too risky, even though we might be confident that the market is eventually going to be resuming the existing trend direction. But the confirmation of that continuation of the trend direction will only come once the market has broken below these counter trend line setups, and not only broken below it, but in doing so, it would also provide us with a strong signal. In this case, a strong bearish signal in the case of a downtrend to confirm the continuation of the movement bearish. Now, taking a look at the 4-hour chart, which, as you know, based on the nature of the relationship between the daily chart and the 4-hour chart, this would be the time frame that would provide us with the heads up in terms of what is going to be taking place on the daily chart. So the movements on the 4-hour chart will eventually be reflected on the daily chart. And so what we would do is to take a look at what is happening on a 4-hour chart to anticipate the type of signal that we could see given by this time frame. Now, taking a look at the pullback that is taking place above the counter trend line, which on a 4-hour chart looks more of a fairly strong uptrend line. One of the possibilities is that the market could actually form a double top formation that would indicate the start of the movement bearish that will eventually break this trend line. So here you can see that the market has already started to pull back fairly aggressively, and it is now actually starting to U-turn with this bull candle. So one of the possibilities is that the market could start to rally in this area here and then lose momentum and then be taken over by bearish candles, which will take out this bullish rally. That would indicate the start of the formation or the completion of the formation of a double top signal. And then once that double top is formed, the market would then need to provide us with a bearish breakout candle to confirm that this is in fact a double top formation and confirm the break below this trend line to indicate the start of the bearish movement once again. So as you know from the trading manual, double tops are very common when it comes to the transition from an uptrend to a downtrend. And so what essentially is happening here is that the market would have formed two types of evening stars back to back or side by side. Evening stars, you know, on their own are a very strong signal to indicate the start of a bearish move. And usually if you find that the market is providing two of them side by side, it is providing even greater confirmation of the start of a bearish movement. So this is one of the possibilities that we're going to be looking at in terms of a signal that we could trade on a 4-hour chart as the market gradually transitions from an uptrend and this temporary pullback back in favor of a downtrend that will eventually take us down towards that major support point on the daily chart. So as the market makes its way towards a support point, it could provide us with trading opportunities to trade it short. And the first one of these could come in the formation of the double top formation that we could trade as the market breaks below this uptrend line. So that's it in terms of the situation on the pound US dollar. Based on a strong downtrend that is taking place on the daily chart, we could actually see we're expected to see the market head towards that major support point that was formed back in July of 2016. So as part of that movement that should continue following the temporary pullback that is now taking place, we could take advantage of it by trading what could possibly be a double top formation on a 4-hour chart that could provide us with a strong signal as the market eventually breaks the uptrend line on a 4-hour chart, which is essentially a counter trend line on the daily chart. And of course, from the trading manual and the theory of counter trend lines, once these are formed along the lows of the temporary pullbacks that are taking place in a downtrend, the breaks of these counter trend lines act as a confirmation that the market is going to be resuming the downtrend. So we would look out for the breaks of these counter trend lines and the formation of a strong bearish signal to confirm the continuation of the movement bearish. So going to be looking out for the 4-hour chart to provide us with an entry opportunity in the form of a double top formation. And once it's strong enough and clear enough, then I will look forward to providing you with the trade setup to be able to take advantage of this movement. So until next time, traders, happy trading.